Hey guys, welcome to the Catalyst Conversation. So this is episode 5, and today it is my honor to have Darvish from Paid. And welcome to the podcast, Darvish.
Thanks for having me.
Great. So let's dig right in, right? I've not known much about you. We just met on LinkedIn, and thanks for joining the podcast and sharing insights. Before we deep dive into what we want to speak today about customer journey, could you give us a quick snapshot on your journey, right? From employee to the startup, and as well as the things that you're doing today. Yeah.
Sure. My background is very different to, the normal entrepreneurial journey. I started off as a recruiter in my first job. So background to me, actually, I was born in Hong Kong, but I grew up in Nigeria for a little bit. I think that's kind of important to the story. So between the ages of sort of 2 and about 10, I was in Nigeria. Then moved back to Hong Kong, did my sort of high school there, undergrad, my first job as a recruiter. And then when I was about 26, I moved over to London because I wanted to have a new experience in life, I guess, and sort of see a new country. About 10 years in recruitment, I decided to move on from that. I think the good things about recruitment, or the best thing about recruitment, and I think you'll appreciate this, is, it really teaches you the fundamentals of sales.
Yeah.
And like when you're going out, the difference between recruitment and a product sales is that recruitment, the product gets to talk back to you and tell you they don't want the job.
Yeah.
So it was really, it was an interesting way to sort of sink my teeth into it. But after 10 years, I think I was done. So I went back, studied for a year. And then after that, I came out and I actually joined a now Series B, but then seed stage startup in the UK. Doing something called open banking. The idea behind open banking is very simple. It's basically the technology that allows bank accounts to speak to each other, which means that you can make payments much faster and you can collect data a lot quicker of an individual. Therefore, credit checks, etc., becomes super quick. I joined there as chief of staff and head of operations. I did that for a year and a half, and in that time we tripled the business and 5x the team. So real fast growth, went from seed to Series A. But I think it was my sort of past that was chasing me a little bit. So a week into my job at my last company, a friend of mine from my postgrad came for dinner, and he told me about a company he was working with called WageStream, and what they were doing is something called EdWage Access. And the idea behind EdWage Access is very simple. We work with employers to allow their employees to access their salary as they earn it. So if you think about it, it's salary advance, but it's only of the salary that the person has actually earned up to that point. And the way you have to look at it is really financing through the paycheck. And I found that absolutely fascinating. So it was a week into my gig in the UK, and from then on I kind of realized this is kind of what I want to do with my life. So I spent sort of 6 months trying to figure out, if any of my friends would actually work on this idea with me. I wanted to move back to Asia to do this. And when they all said no, midway through the pandemic, I quit my job and moved out to Singapore. This is October, November 2020. And I basically joined Antler, an incubator in Singapore. And the reason I say my background is really sort of interesting in this is because when I grew up in Nigeria, one of the things I saw a lot of the times was the sheer poverty. And it really hit me as I was growing up that the individuals who actually need the money most are the ones who have to pay the most amount of money or the most amount of interest to get that money. A shocking stat that even 4 years into the journey, I found out last week is that according to one statistic, of the GDP of Thailand, about 20% of that GDP is owed to loan sharks, which is a stunning amount of money, right? And that just shows you that the ability for individuals to actually get access to money from the right means is just not there, and that's kind of why Paid exists.
Wow, that is really good stat, and I can't be inspired. So today, Paid is actually to solve employees' issues or anyone that is actually couldn't get access to the wages or money, and instead of having go through a proper channel, instead of going this, and they don't have to go to maybe loan sharks and so on. So that is that the customer segment that you're trying to solve today?
I'd say anything to do with salary related is probably a bit more. So, I think the thought process from us is, for example, gig economy workers as well.
Yeah.
I think it would shock a lot of people to know that gig economy workers also have to wait 10 to 20 days to get paid after they do the gig.
Yeah.
Which means they can't get immediate access to their money. We're trying to help solve that. There's casual workers in Malaysia and Thailand. So we're in Malaysia and Thailand right now, which is why I mentioned both. But there's casual workers in both countries who will do a job and then they get paid a week later.
Yeah.
So they'll come in for a 9 to 6 and then it takes them a week to get paid. They might even get charged a commission to get paid that money as well.
Yeah.
So something that we think we can solve over a period of time. There's people who live on a commission-only basis. Now think about your real estate agents, think about your insurance agents.
Yeah.
These guys, they get paid once every 6 months sometimes. So there's a huge opportunity there to help them unlock that salary as well. So I think the segment actually is not just the blue-collar workers. I think that's what everyone thinks. Which access blue-collar workers. But in our minds, it's anyone who gets paid a salary later than they expect to get paid or wants to get paid a salary.
Okay. Cool. You mentioned, you grew up in Nigeria and Hong Kong. You started, your company in an incubator from Antwerp, which is based in Singapore, while in Malaysia, and Thailand, and so on.
So actually, interestingly enough, I started off the company with a Malaysian co-founder who no longer is with part of the business.
Okay.
So we started this off mid-2021 actually. So like yourself actually, it took us about 6, maybe 7 months to build the product. And so the first market we came to was the market that, we kind of knew better, and that was Malaysia. So in June 2021, we actually launched the product in Malaysia. And the prevailing thought process here is that unlike Indonesia, I think the Malaysians can actually afford to pay for this product. Now, what we saw very quickly is that employers don't want to pay for this. We've got a couple of competitors in the market that try to charge employers. It just doesn't work. So we kind of decided that we would have to charge the employee for this. What we were also seeing at the time is that for a lot of the companies, and there are some that have made it work, but for a lot of the companies, you'd have to subsidize quite a significant amount of that if you're going to a country like Indonesia. So we wanted to pick a country with a large enough population, with a large enough problem, with propensity to pay. And also, the key thing is we think of ourselves more as a payment company than anything else. We wanted to go to markets where the payments market is very nascent. And, I think the fintech space, as in Malaysia specifically, is just starting to grow. And that was kind of the thought process behind Why Malaysia.
Cool. So I really like what you brought. So today, actually, you wanted to discuss customer journey, right? So you mentioned, I think today, a lot of startups, they are very focused on product, and you being recruited yourself, and you have seen and go, or you've been through the experience of actually how to get sales yourself. And I think that is very, very interesting. Give a lot of insights of, how can the company today, say startup, masters customer journey, specifically, from day when you manage to generate a lead, right? A lead to actually become customers and then to become the repeated customers. So I just want to ask, how does customer journey came along, right? Especially in tech startup today. Maybe you can share a bit of your company, like how do you get describe an ideal customer journey for you?
So we're uniquely placed in that, in the sense that we're B2B2C, so we have two different types of customers. So, when we first started this company, the prevailing thought process, and hopefully it will still be this, but it's not true, is that any employer would want to give their employee access to their money, because why would you not do so if it's free to do so, right? If that person cannot go to a loan shark, you are already saving them not just money, but stress and whatever else comes along with that. So we really focus on the employee user journey. And, we focused to start with and still do for the predominant part on the B40. And the key thing we realized with that is a lot of those individuals, they're not necessarily tech savvy. So when we went through the customer journey, we were really looking at it from a perspective of what are they doing without us today? So the first thing we always do whenever we're coming up with a product is we kind of map out the process that they are going through without paid. And then we kind of circle the pain points. Say, are we actually solving anything? So when we first started this, we were like, okay, person A, goes through, let's call him Ahmed, right? He goes through, 2 kids, I'm kind of walking you through our ideal customer profile right now anyway. I am cheating a little bit. But 2 kids, earns about 1,500 ringgit a month, spends, 500 ringgit a month in rent, spends 300 ringgit in, food and groceries, 200 in utilities and whatever not. So he's left with 500 ringgit a month, which is about 6.5 ringgit a day, if you think about it. That's quite a scary statistic that, for one to live on. And then we go, okay, so Ahmed then has COVID, or his wife has COVID, and that test on its own is 50 or 60 ringgit. Not a lot of money, but how does he pay for that? And so we then map out going, okay, well, actually, without us, he's got family and friends he can go to. He's got his employer that he can go to. He's got the banks that he could potentially go to. And then obviously our least favorite option is loan sharks. So we map that out and say, okay, between all of those journeys, what happens? Family and friends. Okay, well, he can go to family and friends, but most of the time, if you're earning 1,500 ringgit, you usually don't have friends or family earning 10, right? And have a lot of disposable income. So that becomes a little bit difficult. By the time they rustle up the money, etc., it could be a real thing. The second thing is, okay, you can go to, your employer. Most of the time, employers in Malaysia don't give you access to advance pay. And if they do, you need to fill in a form, you need to go to HR then needs to go to the CEO then needs to see if the worker's worked for 6 to 12 months, has been okay, etc. And so it's a very convoluted process. And the thing we missed out over there very early, and now we realize as well, it's become even more powerful, is based on face, which is an Asian thing, you won't go to your employer, even if you could. Then you go to the banks. None of these individuals are bankable, unfortunately. The banks don't make any money from them. And so we go through all of these journeys and we say, okay, what are the pain points that we need to really circle and fix? The first one we thought of was actually we need it to be as convenient as possible. And then the second one we thought of is it needs to be instant, right? And those are the things we ended up fixing and trying to go for. And then the customer journey is only as strong as the customer, if that makes sense. So you actually don't. What we learned over time, and I listen to a lot of podcasts, so I'm actually happy to be on one for once. But what we learned is that if you can't live a day in the life of your customer, you don't really understand this. And a personal story here, actually. When I first started the business, I actually tried to live like our users. Because I came from London, I was in Singapore, and we were earning what we call a stipend from ANPA, which was 2,500 Singapore dollars. My rent was 1,100. So I was living on 1,400 ringgit. $1,400 a month, which sounds like a lot of money if you think about it, but when you break it down, it's literally $50 a day. And then you've got to think about bills, utilities, whatever it is, and all of a sudden what I was realizing is every day I would actually literally have to count how much I spent on a daily basis. If a friend would invite me out, I would have to think twice or 3 times as to whether or not I was able to afford to meet my friends. And 3 months into this, I was madly depressed, because I realized that I was not seeing my friends anymore because I was pinching every penny I possibly could, and living that lifestyle was incredibly stressful. And it had nothing to do with the fact that I didn't necessarily have enough money, and I appreciate enjoyment. It is not something that everyone gets to do, etc. But it was just a stress of, okay, can I, if I live like this, can I afford vegetables tomorrow? Or if I spend a bit too much today on something because I need it for the business, because again, I was running my own business, then I actually don't have money in my own pocket. And genuinely one of the most stressful, depressing periods was when I was starting this company, and I actually lived that moment. And so now, every time I think about the user, I kind of think about that guy as well.
Wow. So that actually prompts you to, when you're saying you live that kind of life, have you started paid, or that's
literally the first 3-4 months when you started paid,
and that prompts you to really move forward to really get this done.
So I knew the pain point existed, but I never really experienced it, right? Like I frankly grew up without any money, but that really didn't matter to us. Our parents made sure that we didn't, or my mom specifically made sure we never felt that, right? So it wasn't like we didn't think we were poor. Now looking back at it, we definitely did, but that wasn't something that I thought of living day to day or anything like that. We just couldn't afford certain things, and that was just life. But actually being an adult, having to manage your own expenses, having to see this firsthand, The label that gets thrown at a lot of these people is they're just, they don't think properly, they're uneducated, they're financially illiterate, they're spendthrifts, they don't think, etc. When actually the stress of living a life like that on a day-to-day basis, not knowing that you can get, and again, look, I had savings, right? So luckily, if I had to, I had somewhere to dip into.
Yes.
They don't.
Yeah. Wow. It's really, really fascinating because, thanks for being real. So I think that is really a good point, especially today. I think, again, I've experienced it. They found this normally, business owners, they always develop a product first, then they only decide, is this a pain point? But where else really live with that pain points and really ensure and validate that. And I think today, the product is definitely solving a lot of people's problems. So, again, I want to go back to lead generation. So, what is your go-to strategy to grab your customers? Like do you do blast? And B2B, B2C. You mentioned that you're more on B2C today. And you mentioned that you guys are focusing a lot on B40 as well. So how do you market this solution to that group of people today?
So to be very honest with you, we're B2B2C, right? So our focus is more on the B2B side than the B2C side in terms of sort of go-to-market. Okay. I have to say, to start with, when you go to the B2C side, as soon as you explain to these individuals what we do, and you explain to them that we're not, here to steal their money, because that's the amount of times we get asked or somebody asks whether we're a scam, is out of this world, right? Because you're going to give me my money for very little of a fee. Yeah. This seems wrong, right? Because they're so used to being treated badly that they just go like, you must be a scam, right? Like, how can I get my own money so quickly? But once we get past that, the usage rate is pretty high. In Malaysia, we probably see 18-20% per company on average. In Thailand, we're seeing up to 30.
Wow.
Yeah, exactly. And then, the average user uses us 2.5 to 4 times a month, depending on the country. 2.5 in Malaysia, 4 in Thailand. Yeah. So the B2C side has never really been a problem. We do our outreach, etc., but it's not. You're not pushing these guys to use a product. They actually understand the value of it. Yeah. And I can talk to you about that in a second, because obviously the question is on abuse versus if you're going to use it 4 times a month, why, etc. But going back to the B2B side, I think that's where the real sort of problem came for us. We started in June 2021. By, Jan 23, we barely had any sales. We had our first 5 or 6 clients within 6 months of starting sales, and we thought we had made it, right? We were like, okay, we know exactly what we're doing. This is going to be amazing. Yeah. Clients are coming. One of our first ever clients was Starbucks as well. Oh. So when you're 6 months old and Starbucks is signed on, you've hit gold, right? Fast forward 6 months later, not a single client. Yeah. And what we realized is there's only so many people that buy into the value that helping your employees get access to their money, because loan sharks are out there. Yeah. There's only, you're sort of early buyers to that product, right?
Yeah, true.
And so we actually had to switch focus entirely in terms of what we were doing. And this is, going back to May 2022, right? And what we ended up doing is literally between me and what was then my 2 salespeople, every single pitch we did, we would come back and we would reiterate. And we took 3 months to do that. Like every pitch, we would reiterate. And I think by October that year, we finally solved that problem. And then we started signing a number of clients. Today we have 70 plus. But that's pretty much basically since the end of 22. So the last 2 years we've signed most of those clients. Yeah. And the thought process there was always that, employers really understand what the employees are going through. All we have to say is, look, we can help them. But actually what we realized is, from an employer's perspective, there's got to be an ROI to everything. Yes. And so what we ended up selling was not, hey, your employees' lives are better off. Because even though that is the case and we're seeing the usage, what we actually ended up having to sell was your retention rates are improving. So we actually did, very early on, we did a study with one of our clients. And we checked their attrition rate 6 months before and 6 months after. We saw a 34% increase in retention. Wow. And so we started selling that. And I think clients started to see, okay, you know what, we can increase retention, which means we can lower cost of hiring, which means we can keep people for longer, familiarity, doing a better job, etc. And then the other thing we started to see, and we've never been able to sort of do a test on this, but we've actually, like clients like Valorem or clients like Revenue Valley sit down and tell us, they've actually started putting this in their job descriptions that you can have advanced salary, and they're starting to see more people apply for jobs. So that was the other thing that we started to uncover. And then what we ended up looking at was, okay, but who's our real ICP? Because what we realized very quickly was we were selling to a lot of HR people, and these guys are just overworked and probably underpaid from their perspective as well, understandably. And, to add another product that they had to take care of, it wasn't really the fear of missing out that they had, but it was the fear of messing up. And that was something that we really kind of caught on to. And what we realized was these guys, if they're going to stick their necks out and say, hey, boss, I need to put this product in because it's going to help. Anything that goes wrong, it's their necks on the line. Why would they do it? And that was the fear of messing up that they had. So we really had to go even one layer up. And our ICP ended up becoming the C-suite. So, a CEO who is 45 to 55 running a team of 250 to 1,000 people, that's where we saw the sweet spot. And then he would get the CFO involved, or she would get the CFO involved. And then only would you get HR involved at the last step, because then you have the buy-in. It's not that they don't want to do it. They all want to do something like this because they all see the value of it. But sticking your neck out for something like this, well, maybe not all see it, a large amount. There's also still the old, school thinking that if I give these people their money, they will abuse it, and therefore, it's worse for them. But for the most part, they just needed somebody more senior to buy it, and then they would be very keen to do it.
Wow, I like that. So finding your sweet spot is technically C-suite. So today, it's not that the HR is not buying to the idea, but you're right. It's like maybe it's extra work, maybe it's extra risk. They're not doing it. Hence why looking into the right person in charge or finding the right context is very important.
And so to your go-to-market question on that, there's two things that we do. One is cold outreach, which, CEOs are busy, right? If you call them and say, hey, I can save you, 34% retention, some of them might listen, but for the most part, that's not their focus on a day-to-day basis. And then the second thing is, if you manage to reach out, you've kind of got to keep their own attention for a span of time, etc. There's so many other things to do. So actually, the cold outreach is something that is it's done a lot, but actually the conversion ratios are quite small on something like that, because you really need to catch that guy at the right time, give him the right sales pitch, and get him to kind of buy in to want to meet you, and do more than just quote unquote hear about what you have. Because anyone that you call up will be willing to hear you, but there's a difference between willing to hear you and actually ready to buy your product. You really, we spent a year figuring that out, because we did 300 meetings or something like that. And actually, we had a 5% conversion ratio, which was sad. So, that was part of it. The other thing that we do, which, tends to work more often, is find people like them who buy into the product. And then we get a much warmer introduction. And once you can do that, so for example, you find a CEO of a 500-person company, he's going to know other CEOs, or she's going to know other CEOs. And they will then become your advocate and say, hey, listen, I know of a very cool product. And that becomes much more likely to close than it is just, cold calling these guys. So it's got to be a mixture of everything. But I think, the thing that we found out specifically in Malaysia that works a lot better, that we've yet to try, and maybe this is advice for everyone else, is going on the ground. We've seen a couple of companies, one in recruitment, funnily enough, and another one in the fintech space, both doing this. So they will actually show up to the factory. They will actually show up to the shop or whatever it is and say, hey, I need to speak to the manager. And that seems to work really well in Malaysia. So it's something that into 2025, we'll definitely be trying. I'll let you know how that goes.
Cool. And that is something that you guys can go on the ground and try next year.
Yes.
Awesome. Wow, that's very good insight. Great. So now we've covered the lead part. I think that's very interesting, connecting the right PIC, and then of course, having a huge volume, your percentage probably lower, and also having a brand local kit. I think that is very important. what about building that loyalty, right? So I'm not sure your retention rate of your customers today, but like for example, like how do you have repeat customers and how do you actually retain them to say subscribe to your services on a monthly basis?
So we are free for employers, which kind of helps with the retention. I think we have like a 95% retention rate with our clients. Yeah, I think so. The initial issue we have is not that people won't stay. We know they will once they sign up. It's the mentality, it's the education, which is exactly what you guys are doing right now. There's a huge amount of education that needs to go into your employees are safe with us. You're trusting us with your most important, sort of tool, right? Your employees. And so in order for them to sort of feel that comfort, there's a lot of education. Now we even offer them to speak to our clients. Like we had somebody come up to us a couple of weeks ago. The CEO signed the contract and HR was like, I don't believe you guys. I don't think this is going to work. We got them to call somebody in their own industry and they all of a sudden were like, okay, we'll do this pilot with you, we'll start. Let's go, right? So it's the retention isn't necessarily something we're concerned about from an employer perspective. What we found though is on the retention of the employee side, after about 6 months, we have an 83% retention rate. And then you're asking, okay, what do you do for that? Why is 17% dropping off? Sadly, of that 17%, about 90% of them we found out are actually leaving their companies.
Okay.
So it's not that they don't like the product, it's that there's attrition and natural turnover in the industries that we tend to cover, which is retail, F&B, and hospitality. Right? That just tends to happen. So what do we do for loyalty? We don't actually have to do a lot from the B2C side, which is brilliant because, what we see is for the vast majority, if they stay, they will use us 1 to 2 times a month. They get used to it not because they sort of get dependent on the product, but because they budget in a way that we don't think. For me, I budget on a monthly basis, but if I kind of overshoot my budget, it's not as much of a problem. For them, it is. So they actually think about it as, okay, I earn 1,500 a month, but actually I only need 200 a week. So they don't really care about how much they earn, but how much they need. And so they'll be withdrawing 200 a week, 3 times a month. And that's kind of how they live. Some of them do it bi-weekly because that's how they think as well. So they switch the way they're thinking back to what they're used to, rather than what their employer makes them do. But beyond that, there are certain guys that kind of, they go, look, I really like the product, but I'll use it from time to time, etc. So for retention of that, when they need to know us and remember that, doing Deepavali tomorrow or during Raya, that they have an option. We actually do promotions over that period of time. So if you come back to the platform, we'll give you either a transaction free or you can win a prize. That's something that works really well as well, right? At the end of the month, we do a sort of a draw, and we've done things like you can win like a microwave, or all the way up to you can win a weekend away with your family. And so, these guys kind of tend to get excited about that because it's an additional perk, right? It's not a way to push them to use the product like every day, because we're not saying you have to transfer 3 or 5 times. It's like, if you come back to the platform and you transfer at all, you're part of this lucky draw. So this kind of reminds them, okay, if you do need this, then we're here for you.
And do you see the large segment of your, maybe let's focus on the B2C, right? They are family oriented, so either have kids or they are like age 30 and above and so on.
So our average ICP, 25 to 35, 2.5 kids. I don't know why the half exists, 2.5 kids. And earning somewhere between 1,500 to 3,000.
Okay, wow. So the major segments are more on the B2C segment. Okay, cool. What's the toughest part of you keeping, having a long-term customer? So again, you see the retention is kind of 95%, of course, and so on. So what, besides things that you've shared, what's the challenge that you face today to really maintain that, say, 95% of the retention rate to have them become a long-term customers of yours?
So, right now, I think it's what can you do for me next part, right? Because, okay, you're an EWA company, you're helping my employees, I kind of see the value. But there's churn as well, right? So it's not like you've not solved the entire problem. How can you help me solve that further? Right? So about 6 months ago, we were speaking to a few employers. They're like, we need to do rewards for our employees. We don't want to pay for it, but how do we do rewards for our employees? And so initially what we were doing was we were helping them make payouts for Raya, helping them make payouts for Deepavali, etc.
Okay.
It was working for some clients, but they were like, it's just not enough. And then we kind of realized that one of the things we wanted to do anyway on the platform was allow employees to save money by spending money, right? So we went up to the employers and we said, okay, how can we do this? And we started talking to them about e-commerce. And they were like, we don't really want them to buy product, but actually if you can give them discount vouchers on the platform, we would really like to see that. And actually, that's the next step for us. And so what we did was we actually went out and we created this product, which initially started off as just mobile top-ups. And we tried it with a single client, and we said, okay, we're going to try this, see what happens. 25% take-up rate from the people we offered it to.
Wow.
We were starting. Right?
Yeah.
Use your earned wages to get mobile top-ups. It doesn't cost you a thing. We don't charge you anything for it either. You just spend the money that you need to. Work like a charm. We're like, okay, there's something here. Then we started trying other things, right? We tried things like Starbucks vouchers, didn't really work. B40. Tried things like Baskin Robbins, didn't really work. Tried 7-Eleven, worked like a charm. Okay. And we started to put the pieces together. And actually right now, based on the first month that we had in September, we actually sold out of vouchers on the platform. So now we're actually moving into offering something like 50 or 60 vouchers on the platform that these users can have. But whilst we know the users are going to be really excited about it because they're going to save 2-3%, like think about saving 2% on your Myden shop, right? May not mean much to us, but somebody earning 1,500, 2% on a 100 ringgit shop or a 150 ringgit shop for their entire family, it's quite a lot of money, right? So that's what we're doing. But now the employers have kind of caught on to this and they're getting very excited about this as well. So they're saying, okay, well, yes, they're saving money, but how about we also reward them with this? Can we do things like points? And every time they collect certain points on your platform, we give them the voucher. And so now the employers are getting really excited about this, and they're like, okay, this is about retention, but this is also about rewarding those who do really well. So you're not just retaining them, but you're treating them better. And then they're starting to ask for more product as well, right? So we've got a few more products that are coming up into the pipeline into 2025. Things like insurance, for example. Now the employer is providing that to some people, but what we're realizing is there's a ton of people, whether it's gig economy workers, whether it's actual sort of B40 workers that are not fully insured. And even if you offer them, because there's some really good companies, Ouch, as an example, right, that are doing really, really well. But the struggle is getting these people to actually feel like they want to pay for this. But if it's coming out of the paycheck, it's a funny thing, right? Because if you tell somebody that you're getting 1,500 ringgit, but they need to spend 10 ringgit on insurance, they won't do it. But if you tell somebody they're earning 1,490 a month, all of a sudden they know how to live from that. And so it's just changing the mentality to say this is being part and parcel of your life.
I like that. Actually, one of the questions I'll ask is what's next for you, right, for Paid? You mentioned insurance. I think that is really something very cool. You're right, today gigs employees, gigs workers today. And I really like what you say because it's all about mindset. So today, if you have 1,500 and then you want them to pay, okay, spend maybe $20 on insurance. But if it's it's 1,480 and then insurance already covered, it's okay. The way the thing is different. So besides insurance, like how do you see this industry they're in, the platform they're providing, the services, the problem they're solving? What's how far are you seeing this? What it gonna take you and the company moving forward? Besides insurance.
Yeah, I mean, so, when we first started, I think there was a thought process of, okay, how big can you be? Can you be the next digital bank and bank, thousands of people? It's not an entirely realistic sort of thought process in the next 3 to 5 years. I think we need to take steps. Maybe we do get there. My ambition is to get there, but I think that's a much longer term process, right? I think in the short term, it's to, the best way that earned wage access was described to me was actually by a professor. And we were speaking about, the problems of getting the employer to buy in, especially early days. This is back in 2021. And, he said, earned wage access is like a toy. If a child really likes a toy and say that toy is a plastic gun, parents are not going to want them to play with that toy. So the parent is as important as the child in making that decision. Earned wage access is the same thing. If the employees like earned wage access, but the employer doesn't like it, you're never going to get through to the employees, right? So you need to make sure that the employer is really bought into that. So a lot of our thought process about what we're doing now is to work directly with our customers. So I think what we did over the last year specifically, so we've had a revolutionary, I would say, customer success person join our business. And she is just incredibly good at sitting down with our clients, really understanding their pain points. We won't solve all of them, but then distilling it back to us and saying, look, these are the pain points that we can really help solve for the users. So that's how we came up with the rewards, the vouchers as an example, right? That helped us quite significantly. And so what we do is we spend a lot of time with our clients on a monthly basis. And you ask about retention, right? But it's not just about, hey, look, here's statistics about who's using it, because that's what we did for a year and a half. And the clients just wouldn't meet us. And now every sort of 2-3 months, clients are willing to meet us, willing to spend time with us, buy us a coffee rather than the other way around. Because we're constantly asking them, okay, what next? How can we help? Even if we're not helping, what are you going through? And trying to iterate and reiterate with them.
Wow. I had this spontaneous question, like, how do you know whether that customer journey or that retention and so on, your sales career, how do you know whether that strategy that you're implementing is working?
Well, if you pay your salaries at the end of the month, it probably is. Okay. I think it's trial and error a lot of the time. I think we try to spend so now we've actually gotten really, really good at this. I was saying this to a candidate we were interviewing today. It was like, how do you measure like whether or not a product is good to do, etc. Because as a startup, it's almost as many things as you can say no to rather than as many things as you can say yes to. And so now for every product that we launch, we actually have a cost calculation as to what it costs us. And then how much money are we going to make on it in the next 12 to 18 to 24 months? And, we have a product costs us 10,000 to make and our client's going to pay us 500. That's 20 months to pay back. We're never going to make it if we do that, right? But if it costs us 10,000 to make, this client's paying us 500, but we know there's another 10 clients in the pipeline, each paying us 500. All of a sudden, we know it's 5,500. If we even close half of that, say 2,500 coming in, it's 4 months to close. We can do this. So we now really focus on ROI for ourselves. And that's kind of how we measure it, right? Because in theory, being very honest with you, whilst we're focusing on the clients and saying, we'll give you this rewards program and we'll give you discounts, etc., we're not making any money from that. Right? It's just not a money maker for us. But our next couple of products that we're now focused on, insurance as an example, we know we can make the revenue of it. Therefore, we're going to actually spend some time on it.
Cool. What would be, let's probably have 1 or 2 or 3 tips that you can share to new founders today? When they're starting out, they are facing this problem of sales, getting sales, navigating the customer journey, still doing trial and error. We wish you have gone through finding a running strategy on really channeling your sales. What would be the advice that you can share to them today? Like what kind of thing they can do?
So, there's 2 things I would say here. One, controversial topic, as somebody who's raised a fair bit of money, bootstrap. I think raising money to find the sweet spot and sort of, obviously there's caveats to this, right? If you need to build a significant AI product, which takes a lot of money, etc., go ahead and raise that money. But if you're doing something very simple, you can bootstrap, if you ask yourself, could I make this work with zero money? If the answer is absolutely not, because I need these many engineers, etc., fine, there's that. But more often than not, you realize, and I went through this with a friend last week, actually, who was trying to do his second business. I was like, okay, break it down for me. If you had $0, how would you run this? And all of a sudden, he went, I can actually do that. And so that's the first thing I would say, right? Find your customers, your early day customers. You can give it to them for free. You can give it to them for $1. But try and find out what these people really need and if there's actually a pain point that you're solving. Because more often than not, the pain point that you think you're solving isn't actually as painful to these guys to make them spend money on it. And so that's what I would say first. Find your first 10 customers that you can do that with, bootstrapping. Then after that, if you want to go raise money, fine. The product market fit is probably the first thing to focus on, is what I would say. On the flip side, the other thing I would say is, if you're looking at it as my clients need the perfect product on day one, you've probably failed already. The problem that you're trying to solve is clearly there in the market. If it's clearly there in the market, let's say, then the threshold for pain that a client actually has is so much higher than you think. I'll give you an example. I won't go into the exact product, But a client called us into their office the other day and said, look, this is a pain point that I'm solving. I have no idea how to do this.
Yeah.
Firstly, the client called me into the office. Music to my ears.
Yeah.
Right? So I took that away and said, okay, if we can, can you give us the way you're working on this right now? And we went away, not expecting anything. 24 hours later, we had the entire thing in our hands. Wow. All right, okay, there's a need here. And they're like, yes, this is how many thousands of people this affects for us. Can you go out and help us with this? So now we're like, okay, we've got something in our hands here. This could work really well. But you don't want to build it for one client. So we called up another couple of clients in the same space and we're like, are you guys facing this as well? Unbelievably, they're like, come into our office tomorrow. Like literally, within the next week, we were in their office speaking about this.
Yeah.
We're like, okay, if we build this, what's the process you have right now? If we build this, will you pay for it? We've never had a client pay for EWA, right? So for them to go, we pay you immediately. Wow. Was just music to our ears. They're calling us into our office. They're saying they will pay for us. They are guiding us as to what they need. They're giving us an hour and a half at a time. If you have that, I think you're on your way to product market fit. But being very honest with you, like earned wage access, the education piece is high.
Yeah.
So once you get somebody who buys in, it's a really smooth process.
Yes.
But spending 6 to 8 to 12 months to educate people on this is the barrier, right?
Yes.
So for anyone who's setting up a business, if you're facing the fact that people will regularly hang up on you and say no, and regularly need 12 months of education, and regularly kind of say, oh, I'll come back to you and never do.
Yeah.
You're probably not solving a problem that's painful enough.
Yeah.
And I would say focus on finding the pain point, because otherwise you're probably just lying to yourself a little bit, right?
Nice. I really like it. Today we spoke a lot, like really good insight, Damesh. For all the listeners today, what is the one thing you wanted to remember after the session today that you can forget 99% of things you mentioned, we have spoke? What's the one thing that's very important for, I don't know, whether they are founders or they're aspiring to become, start their own business one day? What's the one thing you wanted to remember?
I think the key thing here is, everyone says being an entrepreneur is an exciting thing, but it's akin to being on a roller coaster, right?
Yeah.
There are ups that are great, there are lows that are beyond what you could imagine. If you are not truly, truly in love with solving the problem that you want to solve, I wouldn't start it. Being an entrepreneur, look, there's success stories all over the place. You can make a lot of money doing that, absolutely. But, no one talks about the fact that 90% plus of startups fail, right?
Yes.
And so you need to be willing to roll with those punches.
Yeah.
So I would say, for me at least, every time I give people advice, it's have 2 years worth of savings on the side. That you can live your current lifestyle in, especially if you're above 30, you are not going to live on ramen for very long.
Yeah.
So, have a little bit of money on the side, but also be incredibly passionate to the point where if you didn't solve this problem, you wake up every day feeling bad about yourself.
Yes.
Because if you're just going in there and saying, oh, I could make a lot of money by doing X, and you have no conviction towards it, etc. The first 10 times somebody says no to you, you're gonna feel fear and walk away from it.
Yeah.
Or you're just gonna go down this path where you're not really trying to solve the problem. You're just trying to find money wherever you possibly can.
Wow.
And that's not a way to build a business.
Yeah. So be passionate, like really, and not just passionate about the ideas they have, but just, passionate about solving the problem, right?
Then that's the key thing, actually. Don't fall in love with the solution.
Yeah.
Like, fall in love with the problem, because it doesn't really matter what, like, the solution could be the least eloquent and elegant thing that you have, right? But as long as it fixes the problem, you're fine. The moment you fall in love with the solution and not the problem is when you get into wrong.
Amazing. Great. Well, thanks so much. I think today has been very insightful to me as well and to our listeners. And no, I think very good discussion with you.
Thanks, man.
So maybe the last one is like, where can they find you? Like your company, your profile, for the listeners today, when get connected with you to learn as well as, for businesses you're listening, or you think you are B2C you're listening today, where can they find you?
Yeah, so, firstly, our website, www.justpaid.com. So, interestingly enough, for those in Malaysia and Thailand, it's actually Payd, because people don't necessarily remember our name, so it's PAYD. And we also have, we're also on LinkedIn, so PAYD on LinkedIn.
PAYD.
So that's where you can find us. But yeah, for the most part, we're called Paydi, which actually tends to work for us really well because in Thailand that means good pay. So
Yeah. Whoa, I like it. Cool. Well, thank you so much, Davish.
thanks for having me, man.
Thank you for listening and being here today.